Hello, fellow traders. 'Tis I, the Rumpled One. Thursday, November 15th, the year 2018. Let's talk trading. Your trend or tendencies. You know, one of the things that I've been blasted about, for the past, say, since about 2001 or so, maybe a little bit later, is when I say there's no such thing as trend. Trend doesn't exist. It only exists in the mind of the trader. And that's a true statement, because we all know we can argue about the trend. Oh, the short-term trend, the long-term trend, blah, blah, blah. But what about your trend? Or, as I put, tendencies. What are the things that you do on a regular, recurring basis, in trading and in life? Because those would be your trend, the things that you are doing because you just pretty much stay along that path. Now, in trading, if you have the trend or tendency to not place a stop loss, you might have the result of blowing up several accounts. If you have the trend or tendency to rush into trades, you might find yourself experiencing drawdowns or hitting your stops more often than you would prefer. So you might want to take a look at your trend or your tendencies as opposed to trying to identify trends on the chart. In fact, it's kind of funny. I had written this down as a topic. I guess it was last week sometime, because I was reading somebody's newsletter, blog, whatever, and they had mentioned something about your trend. And then just yesterday, I received, or was it today, this morning, sometimes I can't remember exactly, days are starting to run together. I received a email, one of these trading emails, about a new indicator. In fact, I'm probably going to code it up just because I can, but I think it's called the stickiness indicator, and it talks about whether or not a stock sticks with a trend. And this is supposed to only be for stocks, but I don't know. I might write it up. Might even do a stock fetcher filter for it. I haven't done stock fetcher in a while, and just to let the guys over there know I'm still alive. But I find it interesting because this guy says, I saw this every time I see a new indicator, I'm all in. That kind of begs a couple of questions. Why is the first one. Why would you be all in for a new indicator? Either, you can look at the possibilities of the answers, like either A, you're not doing too well as a trader and you want to see if this maybe makes you more profitable. B, you're doing well and you might want to see if this indicator is going to make you more profitable. C, maybe you just like to look at indicators. I mean, if anything, I used to fall in that category. I don't indicator hunt like I used to. I don't really collect indicators like I used to. I find most of them, fall into the squiggly line category, which you know how I feel about squiggly lines. And if you've been around, in case you don't, I think those squiggly line indicators are akin to reading tea leaves and voodoo practices and anything else that's based in mythology or a belief system, as opposed to based in statistical analysis like frequency distributions. Anyway, but getting back to you and your trend and your tendencies, that's something that you just have to look at for yourself. I can't do it for you. Other people might be able to spot your trend easier than you because, you're in the middle of the forest and you can't see the forest because of the trees. It's hard for individuals to zoom out on themselves sometimes. So, in fact, I received an email from a trading buddy of mine, and he said he really liked the spread dots, and he kind of apologized because he was putting squigglies on his charts, but that's okay. each person, each trader has to find their own way in trading, just as you have to find your own way in life. And you just have to see if it works. I mean, that's the only thing is when you look at what you're doing, is it working? And in trading, basically that answer is it making money? Um, because that's what trading's all about is profit. So that's what I would suggest you do. It's Thursday, so maybe if you trade on Fridays or even over the weekend, you can look over your trades and just see if you can spot one little trend. Because sometimes if you fix one little thing, um, you can have big outcomes. And the reason because of that is from something else I was reading where the guy talked about feedback loops, where you put something in one side, it comes out the other, but part of that output goes back to the input side. So he used the example of money, why rich people get richer and poor people basically wind up getting poorer, because rich people, they put money in one side, they get money out, and then they take some of that money and they put it in there, and the money grows, compound interest. It just keeps, you have money making money, then you have money making money that's making money, and so on and so on. On the other hand of the spectrum, if you go into a little more debt each time, then you have mounting debt. The interest on your credit card debt mounts up, and you just find yourself further and further and further behind. So, and then there's everybody else in between who might just do just a tiny bit, such that it's a very slow degradation or slow improvement. But sometimes some things are slow in the beginning, and then it's like a snowball. They pick up momentum, and then pretty soon, and compound interest is one of those things. So it's just another thing, just to check your trend. Are you making these maybe what seems like just tiny mistakes, but over the course of time they multiply and compound? So if you could just spot one trend or tendency that you have that's working against you and stop it. And just stopping it alone will improve it. And then maybe if you can reverse it and do something instead that improves, you might find that your trading and life really turns around. So sometimes just stopping is enough, but it's hard to if you just stop doing something, you usually have to replace it with something else. So along those lines, if you're not paying attention to your money and risk management, well, now you have to. So just remember that. And as we move forward here, looking at the charts, the monthly, 130 pips off the low, 130 pips off the high. So we're kind of like right in the middle of the month right now. And technically the 15th, since there's 30 days in the month, we're right in the middle of the month too. Isn't that interesting? On the weekly, you can see here, we're right back at the open. So this is a Larry Live trade. You've got opportunity to get in on that last weekly open cross and take advantage of all the movement between now and the end of the week, which is tomorrow. So are we going to exit the wick zone to the upside? Oh, now we just went down one. And once again, for those, if you didn't tune in yesterday, all the gaps have filled. I've given you the heads up. I gave them on Sunday, Monday, and Tuesday. And if you didn't take advantage, that was your choice. Daily, you can see here yesterday was pretty much a doji. We popped up. We're in that upper wick zone where we'll probably remain. I don't know what's going on. I guess something happened with the pound yesterday because this range is insane. I guess maybe I should have been paying attention, but let's just see. Well, let's look at the pound dollar. Maybe we can. Holy cow! Right out into that wick zone, out of it. Purely amazing. Now, anytime there's big moves like this to one side, I would think there's going to be a bounce back to the other. So might want to go long the pound for pick up just a couple of pips there, but that looks like something to keep your eye on. Guess there was some news. I was busy doing other things yesterday, so I was away when that happened. We'll go to the hourly chart. Maybe we can see when that occurred. But first, we got a long trigger here. There's the pivot point fading the pivot each time. There's a 1 payoff, 2 payoffs, 3 payoffs, a short here. Now, if you put your stop right here, it would have been a loss. Otherwise, you stay in the trade or get in the trade here. There's money to be made, short trigger there, money to be made, long trigger, money to be made once again at the pivot. Here we had a long trigger, okay, and a short trigger. You might have gotten chopped there. And here we have a long trigger this hour, once again, proving to be profitable. Rat zone trade, Larry live trade, we're in the upper rat zone. Look too short. When we show we took out the pivot on the, let's see, on the, we came down to the monthly open and reversed. Once again, took out the pivot here. We covered a missing pivot finally. Because I believe, let's see, was it yesterday we had missed this pivot, but now we covered it. Let's see. We missed one on 11.9, 12, 11.02. I thought we had a, yeah, 11.02. Where was that missed pivot? There we go. We covered that before. So we've got those pivots taken out. And then you can see here, price action, 3 ball at the bottom, green at the line, 1 ball at the top. Next hour, look for red at the line. Once again, candle colors at the lines are usually profitable here. And you want to take that first line cross if you can. Don't wait for the second one. You don't need confirmation. And here, in and out of the wick zone, you can see here we popped out at a lower wick zone. A couple times we popped out here right into the upper. That was a nice trade if you jumped in on that one. Highest open, you can see here this hour. There was a short opportunity. You're up about 11 pips right now. If you took that short, and the inventory reduction bars, we had a long trigger. Our short trigger isn't till way down here at 0.31, so we're a ways from any shorting on the inventory reduction bars. My favorite, you can see here, there was some chop, finally some profit, nice profit, nice profit, nice profit, nice profit. Just take candle color at the line. What could be simpler? Ooh, looks like I might need to change something here to make these things even up. I can see that. Give it a little more space. And I just recently turned the computer on, as you can see here on the tick chart. And right here. No, I should switch this back to M1. And you can see what happens here. So now we've got this minute right here. We're saying we're getting ready to trigger a long. But that's it, fellow traders, for today. Remember, your trend or tendencies. If you can find one that's not working well, you can stop doing it and your trading might turn around. And remember to replace it with something that will be profitable. Because it's not what you trade, it's how you trade it. So go forth and drain